Learn the latest blockchain developments and explore investment opportunities in the crypto market. Welcome to the new world of crypto. Today, I'd like to ask everyone to consider a question. What exactly is the current cryptocurrency market? If we only look at news headlines and community buzz, it appears to be a frenzied casino dominated by meme coins and AI narratives. But on the other hand, Wall Street giants like BlackRock and Franklin Templeton are rushing into this space at an unprecedented speed and scale. This is a profoundly paradoxical phenomenon. The market appears to be undergoing a profound great divergence, splitting into two distinct parallel universes. One is the increasingly regulated suit universe, dominated by institutions. The other is the bizarre meme universe, driven by retail investor sentiment. So, what is the truth? Where's the money actually flowing? Today, we'll combine three authoritative reports from CoinGecko, one on real-world assets, RWAs, one on the market in Q2 2025, and one on exchange liquidity, to paint a panoramic picture of the current crypto market and explore how investors can navigate this major divergence and identify their own position. Let's first examine the first universe, which I believe will determine the future of the industry, the suit universe. Its core lies in the tokenization of real-world assets, RWAs. What are RWAs? Simply put, it's about moving valuable real-world assets like dollars, U.S. Treasury bonds, gold, stocks, and even real estate onto the blockchain. This isn't a story about the value of a monkey head, but about how to make the global financial system operate more efficiently on the new rails of the blockchain. According to CoinGecko's RWA report, the leaders of this transformation aren't those cool-sounding tokenized art or real estate, but rather two of the most boring things: fiat stablecoins and tokenized U.S. Treasury bonds. Fiat stablecoins. From 2024 to April 2025, their total market capitalization soared by $97 billion, reaching a new high of $224.9 billion. USDT and USDC dominated the market. Tokenized U.S. Treasury bonds. This sector saw even more astonishing growth, with its market capitalization increasing by nearly 540% to $5.5 billion. The undisputed leader among them is the BUIDL Fund, launched by BlackRock, the world's largest asset management company, which alone holds a 45% market share. Let me offer an analogy. It's as if BlackRock has taken the most secure and fundamental financial cornerstone in the real world, U.S. Treasury bonds, and directly minted them into a digital asset that can flow freely on the blockchain 24/7. This isn't just a technological innovation, it's an official endorsement of blockchain technology by Wall Street. In addition to RWAs, there are two more direct channels for institutional entry. 1. Spot Bitcoin ETFs. According to the Q2 market report, U.S. spot Bitcoin ETFs saw net inflows of $12.8 billion in the second quarter of 2025 alone. Their total assets under management, AUM, also jumped from $98.6 billion to $143.4 billion. BlackRock's IBIT dominated, capturing 51.1% of the AUM market share. 2. Public company balance sheets. The trend of public companies purchasing Bitcoin as a reserve asset, led by Michael Saylor's strategy, continues. As of July 15, 2025, the total number of Bitcoins held by public companies globally reached 859,879. Some companies have even begun adding other mainstream cryptocurrencies like Ethereum to their treasuries. The question then becomes, why are these whales, often worth tens or hundreds of billions of dollars, only now entering the market en masse? CoinGecko's CX liquidity report provides the answer. This is liquidity, this is market depth. Liquidity can be compared to the depth of a harbor. A small fishing boat can dock in any small harbor. But a massive ship, like BlackRock, requires a deep-water harbor of sufficient depth, otherwise it will run aground. In the past, the crypto market resembled a patchwork of shallow harbors. But now, at least for Bitcoin, leading exchanges like Binance have dug a deep Mariana Trench. Reported data shows that on Binance, within a $100 range above or below the BTC price, the order book depth on both the buy and sell sides is approximately $8 million. This provides the most basic guarantee for the inflow and outflow of large institutional funds like BlackRock. Okay, now that we've examined the serious suit universe, let's turn our attention to the other side of the market, the boisterous, frenetic meme universe, dominated by hoodies and memes. CoinGecko's Q2 report includes a chart on hot narratives of the quarter that reveals a picture that contrasts sharply with institutional behavior. In the second quarter of 2025, the narratives that captured the most interest among global investors were meme coins and AI, which together accounted for a staggering 57.1% of the total attention. In contrast, real-world assets, RWAs, which we discussed at length earlier, only received 2.2% of the total attention. This is a stark contrast. It shows that while institutions are investing in government bonds and ETFs, the vast majority of retail investors are still focused on emotion and story-driven assets that offer the potential for hundreds or even thousands of times returns. But a more interesting paradox arises. While retail investors' attention is focused on meme coins and other altcoins, the market's capital structure is shifting in the opposite direction. The Q2 report shows that Bitcoin's market capitalization dominance has further climbed to 62.1%, a new high since the end of 2020. At the same time, the other category, which represents the vast majority of altcoins, saw its market capitalization share shrink by 2.0 percentage points to just 13.7%. The picture resembles a bustling casino. Most gamblers gather around the most exciting slot machines with the highest odds, creating a buzzing atmosphere. However, the vast majority of casino funds are quietly and continuously flowing to the most stable and boring Texas Hold'em blue chip table, primarily the Bitcoin market. The market is voting with its feet, consolidating towards safer, more consensus-driven assets. So, facing this increasingly bifurcated, two-faced market, how should we, as investors, navigate this? The answer is, you must understand which game you're playing. Play A, the suit game of big capital. This is a long-term game of patience and foresight. Its core lies in allocating to institutionally proven blue-chip and quasi-blue-chip assets that are being integrated into the global financial system, such as Bitcoin and Ethereum, as well as RWA products backed by top institutions. Signals to watch. ETF flows, the launch of new tokenized treasury products, regulatory bills in major economies, such as the Genius Act in the US, and successful IPOs of crypto-native companies like Circle. Of course, this road ahead isn't entirely smooth. The RWA report also points out that current growth is heavily concentrated in stablecoins and treasury bonds. Meanwhile, sectors like tokenized equities, with a total market capitalization of only $11.4 million, and tokenized real estate continue to be characterized by hype and uncertainty, often accompanied by little action. Play B, the meme game. This is a short-term game based on sentiment and momentum. Its core is to capture market trends and enter and exit quickly. It requires a keen understanding of community culture and the ability to withstand extreme volatility. Signals to watch, social media buzz, influencer calls, and various short-term catalysts. The $OM token mentioned in the RWA report, which saw a 5,779% increase in 2024 before collapsing in April 2025, is a prime example of the brutality of this game. For the vast majority of participants, this is a negative-sum game. As the market converges on Bitcoin, the long-term prospects of most narrative tokens lacking real value are extremely bleak. It's like a game of musical chairs. When the music stops, most people will have nowhere to sit. In short, we are witnessing a profound coming-of-age ceremony for the crypto world. It is splitting apart. On one side, it strives to don suits, learn the language of traditional finance, and enter the grand arena. On the other, it retains its grassroots, chaotic yet vibrant casino culture. For investors, the biggest risk isn't choosing the wrong track, but playing one track with the logic of another. You can't participate in a meme frenzy with a long-term mindset. Similarly, you can't expect Bitcoin to deliver a tenfold return in a week. Understand this great divergence and ask yourself, who am I? What is my goal? Which game am I playing? Only by thinking this through can you find your true path to survival in this peculiar market, half Wall Street, half Hollywood. The above is for informational purposes only, not investment advice. Thank you for your attention.